Good afternoon, ladies and gentlemen, boys and girls. So I'm coming to you today with a new update on my new website, daybydayalgo.com. Now, if you are already involved in the website or as a member to my service, this will just be a release where you now get a login to your own special members page. This sales page is the same for non-members, but the difference is I've added a login and registration button. If you are a member, you will be able to register with your Twitter ID minus the @sign. If you are not a member of the current service, meaning you have not paid yet, it will not let you register. So basically, this is for all people that I have approved that follow me in the private Twitter page. Now, if you are already a member, this is how it would work. You would log in after you created a password with your Twitter ID, and this is what you would expect to see. You would expect to see, you're not going to see this part because I'm an admin user, so you are going to see everything below this section. You will be able to see sorting by the posting date, by oldest positions to newest positions, by percentage from highest to lowest, and alphabetically. You will be able to refresh the page because as new signals come in, there will be more to refresh on the page as the API from Twitter will pick up new signals from the Twitter page, and basically everything I tweet to the Twitter page will automatically be logged into this web page and refreshed every 5 minutes. You will have to press the refresh button to see it, but that's how it works. So just to describe all of the fields, so the average top 10 positions are in an 87% profit range. The average bottom positions are in a minus 16.5% drawdown. The SL minus 15% means that I have assigned a standard 15% stop loss. Now I'm doing this not because it necessarily invalidates the setup. I'm doing this for beginners so that you can avoid all outliers, because outliers can get large at times. As you can see here, minus 30%, minus 31, minus 37, minus 40. So this is all very, very transparent. I basically do not want you to get caught in that minus 15% or more drawdown. I want you to have a 15% stop loss from a neutral area. Now, what do I mean by a neutral area? A neutral area is this section. So let's say I have posted a signal. Let's say I have posted a signal today. I would be here at the bottom section where I posted, oh, sorry, that's the wrong, okay, so I posted the signal today. These are the timestamps, 7:27, where I have posted. Okay, thanks, Dad, for falling asleep. Okay, so I've got these 7:27 and these timestamps where I would post an active signal as soon as the AI recognizes that it's a good opportunity. You would get a posting time and a posting price. The neutral moment would be exactly when it's posted, and you would have a 15% stop loss at that point in time. Not when, let's say, it's up 169% or even up 15%. That is not when you use the stop loss. You use or enter. You do not want to chase these areas. You want to enter in an area that's fairly neutral, which typically is anywhere between, let's say, -2% to 6%. I would designate that area as not chasing. So you can get into that area and then have your stop loss in place. Now, as I said, that if you do stop out, it does not necessarily invalidate the trade. For instance, let's say that okay, so the percentage, so we go to the bottom right here, and we have got some negative percentages. For instance, PPCB is a sub-penny OTC that was actually down over 60% a couple of days ago, but it came surging back with an over 100% day. And if you were inclined to, you would, let's say you were stopped out, you could watch this, stock it, and re-enter if you found a good moment, because all of these signals are based on macro time frames. You do have to understand that I do not trade all of these things. These are all RR opportunities, risk to reward margin, where I feel the highest reward is available for the lowest risk. Now, I continually improve the AI to prevent lower risk, and I actually did so this weekend, where I've added new conditions to even further tighten the risk. Now, all of these plays look through literally over 25,000 stock tickers, and you may be asking, well, how 25,000? Well, because there are a lot of them that it does look even through Pink Sheets OTC market, and basically you're getting the entire market right here at your command in terms of filtration, in terms of the AI looking through everything and trying to offer you the best risk to reward setup in real time. And I might find 10 different tickers at any given moment that have sifted through over 25,000 different symbols to find that risk to reward margin. Now, I will be actively updating this status field. The status field, for now, I haven't been using. I've been trying to launch this website, and it's been keeping me very busy, but I will update it with, let's say, tentative targets, like a first target, a second target, whether I think that it's already inactive, or, and then I may tell all the members that, hey, I'm going to remove this because it's already been in the system for a month or two, and this stock ticker is no longer in play. I have not had a chance to do that yet, but I plan to in the future. Now, this service is really not me hand-holding and telling you what to buy. That's why I'm offering such a discounted rate for the service. When I say a discounted rate, I could show you what that is. So, if you were let's say, inside of the pinned tweet area, one moment here, let me just do that. So let's say I logged into my algo page and I gave you my pinned tweet area, which is right here. You would see what the service prices are. 1 month for $50, 3 months for $120, 6 months for $210. I offer a 10% discount if you actually tweet replies to signals that I post with your own charts or targets. This helps beginner members, and you would be contributing to beginners members to help them set their sell limit orders, and that would help a lot. So I give you 10% off. I also give a 15% finder's fee for all referrals you give me, as long as they pay me for a month or higher, and as long as they provide me your Twitter handle inside the payment note or a direct message inside of Twitter. So you can read all about this if you become a member. The trial is still $10, but today is the last day of the special 50% off the year price, which is $210 for the whole year instead of 6 months. So that expires tonight, and you do have a chance to lock that in if you see this video soon enough, and if you're not a member, or if you are a member and you don't know, you still have a chance to lock this price in. So that pretty much explains that. So these fields, it just describes, okay, how many positive trades there are compared to how many negative trades there are. This describes the average all weighted percentage, so it's 9.957% if you were to include every single one of these tickers, and if you keep in mind the stop loss that I do recommend. As you can see, you know, when they do run, there are some big runners, and I have not even, this doesn't cover the half of it, meaning some of these plays have been up 200 to 300% at one point in time, and I just have not actively been able to keep up and keep a status with it. If you were a member, you may have gotten into one of these crazy runners and sold the rip, as we call it, when something runs, let's say parabolically, and you sell that big pump. So some of these pumps have gone 200 to 300% already, and I believe the highest weighted average percent has been in the 13-something% range. We started somewhere in the 3-something% range when service just began, but it's now been a month, and I do think that this may even increase with time, given that these are all macro signals. What else do you really have to know? So I think I've explained all of these fields. Everything is pretty much intuitive. I'm also adding some new statistics to come, which are very interesting. The new statistics are that I'm going to track drawdowns. 1 second. Sorry, had a call and I needed to mute that. They always catch you at the wrong times. Okay, so this, let's say that something has been down for a certain amount of time in days. I'm going to actively track how long it took a drawdown for all of these negative percentage tickers before they ran up and reversed back into a profitable margin. And then I'm going to take an average of that statistic in time so that you could kind of see in days how long it's taken. So for instance, it may say that the average time for a drawdown is 26 days. And so if you were stocking positions and you saw that some were down and it's only been 7 days, you might say, okay, well, let me be smart about this. The average statistic says that it takes about 26 days before they return back to a profitable margin. So you might say, okay, well, let me keep track of this. Now it's 26 days. Now let me buy it. So something like that, let's say, and I'm planning to add useful statistics that can only be gathered with time and help the members even further with profitable stuff. Now, some people even, the stop loss doesn't consider that you average down. It just considers one position. But let's say you could be a professional trader or an active trader, and you may know exactly what you're doing technically as far as technical analysis goes. And you may decide, hey, I trust Day by Day's work. I've been following him for years. And I think he knows what he's doing, so I am going to buy small chunks at a time whenever things dip. And you might tranche down into 4 or 5 positions, and then it returns back to a profitable margin. Again, my algo is based on big time frames. So, you obviously don't want to go way, way, way too heavy. It all depends on what your account size is. I don't want you to go nuts here. I'm trying to be responsible, and that's why I specifically create this minus 15% stop loss situation to just consider one position. But you can play this in any way you want. It's up to you. It's entirely in your hands. Again, I'm trying to make this service cheaper so that I don't have to really hold your hand, so I can work on the algorithm and work on what I enjoy, what is my passion, which is not trade management. It is to further refine the risk to reward margin tightness with all the criteria I choose, and allow this algorithm to become as good as possible. That about covers everything, I think. And if you do have any other questions, you can always direct message me. You can also subscribe to my Twitter page at on YouTube as the Real Day by Day inside of the search box of Twitter, and find me, subscribe, and you can look forward to regular free content updates on Twitter if I'm doing anything on YouTube, if I'm doing anything to promote, or if usually I do YouTube videos when it's a macro update and I just want to give an outlook for my technique, which is finding historical clones on macro time frames for what I call the MTF. You can learn more about what the MTF is. It stands for Mandelbrot Trend Forecast, named by me. And there's, on my Twitter link, you can read a little bit of description about Mandelbrot, or you can look on YouTube and find information about Mandelbrot and how I apply the financial markets to a science-based principle. So I am not a finance guy, and these are not buy or sell recommendations. I'm not a financial advisor, and nor do I have a license to be. So these are all for informational purposes only. This is all very, very scientific, as I like to call it. And this is all based on my proprietary work that I have been working on for many years now, since approximately 2014, where I have just gone through lots of different turbulences in order to evolve. And this is where I'm at, and I'm sure the evolution will continue. And I believe the party has just begun. So I hope you enjoy the ride. Signing out, Jake, also known as Day by Day, or the Real Day by Day, on Twitter. До свидания.